It's great to have you back. Welcome.
Hey, Kelly.
Digital advertising, since this applies to much more than Pinterest, let's just start there with the positive trends you're seeing.
Well, some companies are seeing it more than others. Meta clearly is, but there's a couple of very specific company-specific product cycles behind that name. If we look out across digital advertising, it's just tentative evidence that brand and performance marketing is starting to pick up in the back half of the year. Those online retail data points this morning from the Department of Commerce, I thought those were actually kind of incrementally positive. So if that occurs, if we have kind of this sustained sort of improvement, because there's no doubt about it, online advertising demand has been depressed year to date. But as that starts to improve, you'll get names like Pinterest that should fundamentally participate in that.
Yeah, and why does this one in particular jump out to you? Is it because it had been left behind, or, do you see more kind of particular things that they could really benefit from?
Yeah, so, there's also been a lot that the company's done. So, one, they need the macro environment to improve. That was the first reason behind the upgrade. We think there's some tentative evidence of that. But also, we've had a management team, and it usually takes a new CEO, at least a year to really kind of start fixing things and getting things in the right direction. We've seen under CEO Bill Reddy a series of improvements, product improvements that have actually caused user growth to improve and engagement, time that's spent per user to improve. And there's been a couple of nice improvements they made on the advertiser side, too, that I think has started to unlock more spend. So as those two things come together, the kind of the macro environment and then the company-specific initiatives, you have the setup for the third reason behind the upgrade, which is this fundamental inflection point, which I always like in stocks. That's accelerating revenue growth and expanding margin. And I think valuation is reasonable at these levels. Those are the four reasons why we upgraded the stock.
Why are they at an inflection point? And I always, not always, I love Pinterest and I've used it for over a decade, just kind of sporadically. But my biggest frustration is one of the things that people for years have said they're about to do, which is, ironically, I wish they would make it easier for me to buy the things that I like. So I'll see something on there, a cool mirror, a rug, whatever. And other than a couple of obvious brands, which I'm not interested in, it's very hard to find what actual product is being featured. And every time I hear people say they're going to roll out these shopping, but they never really do. Every time I get on there, I feel like it's the same old experience.
Well, hopefully it's improved. You're talking about the guts of this is all about product improvement. That's what Bill Reddy, I hope, and the team he brought in, I hope, is really starting to lay out at Pinterest. So the idea of shoppable pins, kind of getting more commerce on the site. And remember, this is not your day-to-day online retail experience. This is project-driven. People go on to Pinterest to kind of run projects, whether that's redesigning a backyard or a home. Categories like fashion and beauty are major on these, and maybe getting into travel. That's what I've sort of find myself using it for. But those projects, to the extent that they lead to inspiration and then they lead to purchases, to the extent that they can close the loop on that, there's a really interesting and it's a unique side to Pinterest. It's kind of this visual search experience that, the advantage of Pinterest is, by the way, it's a tiny company. I mean, they do $3 billion in ad revenue. That's pretty tiny. And so when you get these turns on these businesses, they don't just go up to 10% or 15% revenue growth. It can be a lot better than that. That's not priced in. That's not estimated in. So I just find this risk reward really highly asymmetric to the upside.
Sure. No, I love it. Before I let you go, and because we have time and because you're Mark Mahaney, I just got to ask you quickly about Netflix. Before, we are about to hear from the company. You're bullish, although I think the price target is maybe lower than where the shares are now. People think it'll be a good quarter kind of for bad reasons because of the writer's strike. Just give me a thought on that one.
No, I think it better be a really good quarter. I'm a little cautious about Netflix going into the print. Our pitch is we'd rather buy it after the print than before the print. These two major initiatives in terms of cracking down on password sharing and rolling out an ad-supported service, I think they're going to end up being huge home runs. It'll take a little bit of time, but I think they really will. The only question is, why didn't they implement these a few years ago? But that's the past. I think you're going to have fundamentals improve, and then we're past peak competition. Near term, I guess the writer's strike, and the actor's strike probably helps Netflix relatively, but it's not a good thing for the industry as a whole. It just isn't. Right. Anyway, I like Netflix. I think that it's not as compelling as it was at the beginning of the year, so it's a small buy for me. I prefer Uber. I prefer Amazon. I prefer Meta.
And Pinterest. Mark, thanks so much. It's good to have you on today. Really.